Hi and welcome to this week's look at the major news stories affecting the markets so far. And this week we're going to take a look at the DAX. That's had a pretty good week. We'll also take a look at the yen and the euro, see what's happening in the currency markets. We'll take a look at natural gas, obviously a key commodity at this time of year. And we'll finish off looking at Apple's rather positive week. So let's start with the DAX, and the DAX 40 closed above 20,000 for the first time. The official close on Wednesday the 4th of this week was 20,232.14. First time we've closed over that 20,000 mark. Now, on the 24th of October, we noted that the Germany 40 mini chart, that's what we call it at FXOpen, was losing its bullish momentum and could break downward from the bearish rising wedge pattern that you can see with the black lines. Now, since then, as shown by the orange arrow on that Germany 40 mini chart, the price dropped below that pattern, and then the price found support at the psychological level of 19,000, which had previously acted as a resistance, which you can see with the arrows. The price then rose to a historic high, breaking that 20,000 level. Now, interestingly, the index has risen despite media reports stating that the IFO Business Climate Index has fallen for the fifth consecutive month. And also German services PMI has remained below 50, with new data coming out seemingly confirming that the economic weakness is now spreading beyond the manufacturing sector in Germany. Now, this bullish sentiment that we've seen may be driven by the weakening euro, of course, which makes German export-orientated companies more attractive to investors. Now, we'll take a look at the latest chart, again Germany 40 mini. Now, that indicates that the stock market may be overbought. The RSI is at its highest level since May of this year, and the price is near the upper boundary of the channel that you can see in the purple lines, which is constructed from the key reversal points in autumn 2024. Now, given these facts, it is possible that a correction may be forming under current market conditions. After the rally that started in late November, the index may decline towards the former resistance level of 19,700. So a little bit unclear at the moment. Obviously, there are other political issues now raising their head in Europe, so keep your eyes and your ears open. Okay, now time to turn our attention towards the currency markets, and the yen is strengthening whilst the euro is testing recent lows. Take a look at the US dollar against the Japanese yen. Over the past week, the dollar yen has dropped approximately 500 pips, with sellers testing the critical 150 to 149 range. The sharp decline is likely tied to comments from the Bank of Japan Governor Ueda hinting at a potential rate hike, and in fact experts are now predicting that the Bank of Japan will raise rates by 0.5%, 0.5% at their December meeting. Take a look from a technical analytical perspective, and that suggests that the dollar yen may begin an upward correction after its sharp fall, as a reversal doji candlestick pattern has formed on the daily chart time frame. Now, if 149 down to 148.6 range holds as a support, the pair could strengthen towards that 151.5 down to 151 range. However, a break below the recent lows may well resume the downward trend towards 147, the figure, to 146. Obviously, this week we've got some key events in terms of US figures on employment coming out, so don't forget your risk management techniques. It could be a little bit of a choppy market there. We'll quickly flip now across the euro against the US dollar, and it's pretty clear that the euro remains under some pretty strong pressure. We have the US imposed trade tariffs threat that Donald Trump has been talking about, which could have a significant impact on the EU's production. We've also now got the French government collapse. It's a political crisis that is ongoing, even as we record, and that is certainly going to be exerting some further downward pressure. The Prime Minister, for example, is stating he's going to resign, and what's going to happen moving forwards. Well, at the time of recording, we're trading roughly around the 1.05 area, and the pair may see an upward correction towards that 1.07 to 1.06 range if buyers manage to push it above the 1.06 down to 1.540 zone. However, another rejection at 1.0540 could lead to fresh lows, possibly around that 1.0340 level. So again, a lot going on. Pressure in terms of tariffs, and of course what's happening in France at the moment. Again, it could be quite choppy out there. We could see a bit of volatility, so again, don't forget your risk management techniques. Now, time for a look at a commodity now, and it's going to be US natural gas. Pardon the pun, but natural gas obviously quite a hot topic at this time of year. But the price has rebounded from its 2.5-month low. Now, back on the 19th of November, we published an article on our website that looked at the natural gas chart, and we noted the formation of an upward channel that you can see in blue. We also noted a potential bullish attempt to break the key $3.200 level, which had acted as resistance. I mean, again, take a look at those arrows to illustrate that point. Now, as we can see on the chart, the price rose above the $3.200 mark, but failed to hold above there. Now, after fluctuating the upper half of the channel, it dropped below the $3.200 level to the lower boundary. Now, that was driven predominantly by a bearish report from the Energy Information Administration, showing US inventories were above the 5-year average. And we have further inventory figures coming out in the next few days, so keep your eyes on them. Also, a report from the financial firm LSEG, noting increased average gas production across 48 US states. Not quite the record levels that we saw in December 2023, but certainly a reasonable increase. Now, this sort of helped push the price to a 2.5-month low around the $2.935 level. But what's going to happen as we move forwards? Well, TA on the chart would suggest that there is going to be potentially some support from the channel's lower boundary, reinforced by the psychological $3.000 mark. And that's evident in the emerging price reversal that you can see shown by the arrows. On the other hand, the $3.200 level may well resume acting as resistance. So it's quite possible the price will fluctuate between that $3 figure and the $3.200 figure, with things such as weather forecasts playing a decisive role in shaping consumption expectations for the winter season. As I mentioned, we've also got more inventory reports coming out, so keep your eyes on long-term weather forecasts and, as always, economic data that comes out. Okay, finally, we'll turn our attentions towards an equity, and this week it's going to be Apple. Apple price, or the Apple stock, has hit a record high. Now, the chart reveals that Tuesday's closing price exceeded $242 per share for the first time. In fact, the stock is up nearly 30% since the start of 2024. And in the last 30 days, it's gained approximately 9%. Dan Ives, an analyst at Wedbush, commented that Wall Street is beginning to grasp that the iPhone 16 marks the start of a super cycle. Now, according to his insights, which were shared via Barron's, sales in China remain robust, and that new AI-powered features on the iPhone 16 could drive over 90 million users to upgrade. I mean, that's a significant figure and pretty headline grabbing. Now, that could, of course, lead to a record-breaking year for iPhone sales and push its market cap to over $4 trillion for 2025. Ives himself has set a price target of about $300 per share, which is roughly 23% above current levels. Those are pretty significant statements and numbers. If we take a look at the technical analysis of the Apple 4-hour chart, now that suggests that the RSI is in the overbought zone and that the price is near the upper boundary of the ascending channel that you can see in blue, which was formed after the company introduced Apple Intelligence back in June of this year. Again, you know, AI, we're hearing so much about AI on the markets, and it does seem to be a significant driver at the moment. Also suggests it may be vulnerable, of course, to a correction. Now, if that occurs, the price could test the $236 per share level, which was previous resistance. Again, you can see that indicated by some arrows. Take perhaps a look at a broader range of analysts. According to TipRanks, 23 of 33 analyst surveys recommend Apple as a buy currently, and the average 12-month price target is $243, so not quite as high as that $300 that Ives suggests. But clearly, been a good week and a good month so far for Apple. Where it goes from here, well, again, nobody's sure. But we wish you luck with your trading in the week ahead. Bye for now.